Hi guys, welcome to the channel. So today I'll be showing you exactly how I make $10,000 per week by trading options on Robinhood. So just to be clear, I'm not buying naked calls or naked puts, which is basically just buying a call or buying a put. What I'm doing is I'm actually opening credit spreads, whether that be a put credit spread or a call credit spread. So first of all, I just want to show you exactly what that is just to make it more clear. So when I get into my strategy, it's easier to comprehend. You can understand it in a much easier fashion. So let's go to Splunk real quick, right? Which is a big tech stock. And first you go to trade options. Let's say I wanted to open a put credit spreads, right? So I would sell a put, let's say 205, and I would buy a put, which is basically I'm hedging against my selling. So I'm buying at 200, pardon me. So in total right now we have 34 credit. So let's insert one contract here. So for a $500 collateral, I can earn $34 in credit. So this is basically a 6.8% gain. And what a put credit spread is, since Splunk is at 220, I'm betting by the end of the week, by September 4th, Splunk does not hit 205, right? So even if Splunk drops $10 all the way down to 210, I'm still gonna collect this full premium, which is a 6.8% gain on whatever I invest. So that's what a put credit spread is. It's basically where I'm betting that a number does not hit the current value of the stock does not hit my number, right? It doesn't hit my strike price. So especially in a bull market, this is very easy to do because everything's going up due to inflation and due to the Federal Reserve having unlimited quantitative easing, right? So because of that, because of the market going up, it's very easy to bet that the market won't drop a substantial amount in just 1 week, right? So as you can see from my 1 week chart, I just restarted my challenge account. This account, I'm going to be using it to for this YouTube channel, right? So this account will be my journey on this YouTube channel. So hopefully in 2 months, I want to turn this account from 25K starting all the way to 100K finishing goal, right? So I want to make a $75,000 gain within 2 months. Okay, so how am I going to do that? So first of all, let's go back to what this account was, right? So I started this account with $45,000, right? Around 45K, 44K. And I grew it all the way to, so this was back here was, let's say June 8th, right? When you get to August 10th, which is 2 months later, I grew it to $103,000, right? So I made roughly a $60,000 gain in 8 weeks. Okay. Notice the chart will go up and down, it'll be sporadic. That's because when you're trading call credit spreads or put credit spreads, Robinhood, they don't like the charting in Robinhood glitches a lot. It'll mess up, it'll glitch. For example, it'll show that I went from 75K to 22K in a single day. It's just a bunch of glitches, right? So just ignore the chart and just you pay attention to the numbers I'm showing you. So, after I made all this money, I wanted to restart my account. So I restarted my account at $25,000, okay? Just for this YouTube channel, just for this challenge. So this is one of my accounts. Usually I trade on TD Ameritrade or I trade on Webull. So this is just for YouTube purposes. And, it's very smart to take profit. So once I made $60,000 in 2 months, I told myself, okay, I'm going to pull this money out and I'm going to start back over, right? So I'm a normal person just like anyone else. I'm a 22-year-old. I started investing back in March, right? During the whole COVID boom or the COVID meltdown. That's when I started trading. So I'm just as new as anyone else here, but I work in tech. I've had great mentors. I've had great friends, and through my mistakes and stuff, I've learned a really good strategy that works, which is opening put credit spreads as well as call credit spreads. So I'll make a different video regarding that just to explain it further. So one stock I'm looking into this week is called Zoom. So for put credit spreads and call credit spreads, I love playing earnings, right? So Zoom actually has their earning this week on Monday, pardon me. So on Monday after hours, they're having their earnings report, right? What an earnings report is basically the company will release their financials for the quarter to show the investors how they're currently doing, and they will also adjust guidance for the next quarter to see, hey, we're going to adjust our guidance because we feel like we can hit increased numbers. We can hit better earnings per share. We can hit a higher revenue. So usually during the earning reports, there's a ton of volatility, right? And because we're the ones selling premiums, we want more volatility in the market just so our premiums can be worth, the contracts in the market can be worth more, right? Because that implied volatility is what's keeping the contract values high. And during the day of the earnings report or the day before, the implied volatility is at all time high, right? So we can look at Zoom, right? It's been going on a tear recently. This past week, it's been going up $20 because investors are anticipating that they're going to have a good earnings report and that they're going to beat their number for say, right? Just look at the 3-month chart. Pretty slow and steady growth. It started at $200, it went all the way up to $300. So let's look at the options real quick. Let's look at some values, right? So because Zoom is a COVID stock, right? It's doing really well during COVID. I bet that it's gonna go up after ER, right? And I'm not just saying that just because I'm gonna be showing you my data, which will basically tell you exactly why I'm doing that. So actually, let's jump over real quick and let me show you my data. So this is a professional tool I'm using, and let's go real quick to let's go to order sentiment, right? Which is for options. So currently to date, 80% of options that are opened on Zoom are bullish, right? While only 20% are bearish. So it shows you that a lot of smart money is jumping on calls compared to jumping on puts, right? So they bet that the price of Zoom will continue to go up. Okay, so that's pretty good information right there. Next, I'm going to be checking the implied volatility, right? So Zoom is pretty fairly new stock, so they don't have that many earnings reports that have been reported. But over here, I can see the implied volatility, right? Let's look at so I played this June 2nd, okay? The implied move was 12.9%, and the actual move was 7.6%. So what the implied earnings move means is, so let's go over here real quick. So it's showing us over here that it's a 12.6% move, right? So what this means is since Zoom's at $300, the expected move is for it to move 12.6% with the earnings, right? Whether that be 12.6% up or 12.6% down, right? So if you were to buy a put, let's go to 12.6%. We can see that it's expected to either crash to 270 or shoot up to 300, right? So we want to play outside the expected move, right? You can tell from Zoom, it stays inside its bubble, right? It stays inside the expected move, besides this one anomaly right here, which is when it first announced, right? So let's play below the expected move, which is 12.6%. So we would just sell a put. So 270 is the number to beat right here. Let's go down to, let's say, 260. And let's sell a 260 and buy a 255, right? So as you can see here, right, for a $500 collateral, you're earning $95 of credit, which is a whopping 19% gain on this investment, right? So I'm playing outside the expected move. I'm aware that the option sentiment is bullish, that 80% of options that are open right now on Zoom are calls compared to puts. I understand that the whole market's going up, and I'm looking at, let's look over here on EPS versus actual, right? So it shows you the price difference when they release their earnings, right? So here are their current targets, and here are their actual earnings per share that they reported, right? So they've beat every single time. They've beat their earnings per share estimate. They've also beat their revenue every single time as well, right? So that's very bullish for the company. And let's go to stock patterns right here. So stock patterns, you can see exactly how Zoom operates once the earnings report is released, right? So, the week leading into the earnings report, Zoom will go up in value, right? So Zoom will climb into the earnings report, like on average that we can see here. And that's exactly what happened. Pardon me. That's exactly what happened over here, right? 1 week before the earnings report, Zoom climbed. Zoom started at, let's say, 280, and it climbed all the way to 300. So Zoom climbs before the earnings report. So if I'm going to play Zoom, I should have opened a spread 1 week beforehand, right? 1 week before the earnings. Opening gap, we can see that after the earnings report, after it gets released, the next day. So the earnings report is on Monday after hours, right? So Monday around 4 p.m. Eastern time is when it will be released. Okay, so the next day, which is Tuesday, once it's released, the opening gap is 1.7%, right? Or 5.6%, 8%, 0%, 17%, right? Meaning the opening price from after hours and pre-market till Tuesday at open will be last time it was at 1.7%, right? And this time, and during the entire day, it climbed to a total of 7.6% during that entire day, right? So this is pretty good to know. But look, afterwards, we can see that Zoom is pretty, it sells off. People are taking profits on Zoom after they have great ERs, right? After they shoot up. So before the ER, there's a bunch of buying, and then afterwards, people take profit. So for Zoom, what I'm going to be looking to do is I'm going to be looking to open a put credit spread on Monday, right? Collect that premium as Zoom will continue to go up. Once the earning report releases, then I will look to close Zoom on Wednesday or on Tuesday, because I don't want to hold this for too long, knowing that after a few days after earnings, it will continue to go down and down. Okay, so let's say we sell a put, right, which is 260, and actually, this is 15% safe, right? Let's go further out, actually. Let's sell a 245 and buy a 240, right? So the premium on this is pretty nuts, right? It's 55 cents of premium per one contract, right? So we're making a 10% gain on this order, right? So I'm betting that Zoom does not crash 19% in 1 week, and I will collect a 10% profit or an 11% profit on whatever I invest, right? Which is pretty nuts to think, right? Like, even if Zoom drops, I don't believe it'll drop a whole 20%, right? Because based on history, it has never dropped 20% before. The worst earnings it's ever had was 10%. And immediately after, it started climbing, right? So I'm using the data. I'm using the previous historical data we have. I'm using the implied move to understand how far it's going to move. So the implied move is only 12.6%. I'm playing 20% out. So I'm playing all the way down here. Zoom would have to go down all the way over here, for example, for us to lose. EPS versus actual, they're beating earnings per share as well as beating revenue. So I believe that Zoom will win over here. Option sentiment, there's a lot of option sentiment on the call side. So 80% of contract open on Zoom are bullish. So just based on that, I can tell that Zoom's a good play. I should open it on Monday. I should try to sell it on Tuesday or Wednesday. And I'm looking to collect 10% profit on this play, right? So I'll do this 3 to 4 times a week, right? Whether that be Apple. For example, last week I jumped into Apple, right? I basically bet that Apple by August 28th would not hit. Let's go to Apple real quick. I bet that Apple by August 28th would not hit $460, right? So after they just had their stock split, right? But last week it was around $510. I bet that it wouldn't hit 460. I knew that they were having their stock split in a week, right? In a few days. So I knew that it would not crash because investors are holding the stock because they see the stock split as extremely bullish, because as the price of Apple goes down, younger investors and more investors can jump into it as it's less of a threshold to jump in, right? And block trading will be even more prevalent in Apple as well. So that's basically my strategy. To sum it up one more time, what I'm doing is I'm opening call credit spreads as well as put credit spreads. I'm looking at different companies. I'm looking at their data. For example, Splunk, right? I've been following Splunk for like over a year now, and they just had their earnings report, right? And because of that, they were up $15. So I actually went into a put credit spread. I bet that Splunk would be above $190 by end of the week, and it ended up finishing at $220. So I collected a 10% gain on that. So that's why you can see that this past week, although it started a challenge account at $25,000, this past week alone, I've earned $6,300, right? Which is only a 23% gain, but it's an extremely safe 23% gain because the chance of, for example, Apple crashing to 460, it'll have to be an extremely red day, not just for one day, but it'll take 2-3 back-to-back red days for Apple to crash that far. And, based on Splunk and it being a data-driven company, I bet that it would go up, and it did just that. Good companies, they don't drop during earnings. They don't drop during a bad earnings. They always get bought back up. So thank you for joining this video. My goal here is to educate everyone on how I play the markets. I'm just a 22-year-old guy, and I've earned over $100,000 from trading options, right? And or even more than $100,000, right? So I want to show everyone exactly how to do it. Making YouTube channels has been a passion. So if you like the video, if you learned something, please like and subscribe. If you have any questions, leave it in the comment section. And if you have any ideas for future videos, please let me know. Some ideas that I have is I'm going to teach everyone, go into depth, what's theta, what's implied volatility, what's delta, what's omega, all this different stuff, right? And I'm looking to create a daily video where I show you exactly what place I'm looking at the day before. So if everyone wants to get in the same place I'm looking at, all power to you. Like, I 100% support that. Let's all grow together. Let's all make money together. And thank you for jumping on the video, and I will see you next time.